Corporate Finance Excel Practice Problem. In this presentation, we're going to work a practice problem in Excel related to cash budget and cash receipts schedule. Get ready, it's time to take your chance with Corporate Finance. Here we are in Excel. We have our information on the left-hand side. We're going to put that into the blue area into our worksheet on the right-hand side, including a cash receipt schedule and a cash budget. So the cash receipt schedule is going to give us those cash flows. The cash budget then is going to tell us where we stand in terms of total or overall cash flow, giving us the beginning balance in cash, the cash flow that happens, and then ending with the ending balance in cash. Let's take a look at our information on the left-hand side. We've got the projected sales for September, October, November, and December. We're going to be focusing in here on November and December. So we're going to need the information up top for September and October in order to focus in on November, December. We have the percent of cash sales. So in other words, the sales that we have up top, the percent that are for cash. We got cash. They did not go through accounts receivable. 30%. Percent of credit sales paid in the month after sale. So then of the sales that are credit sales, how much we got paid in the month after we made the credit sale. We made the sale, put it into accounts receivable, got paid after the month after. 40% get paid the month after of the credit sales. And then the percent of sales paid 2 months after sale. So now we have the credit sales 2 months after, we're going to get the 60%. So of the credit sales, we have 40, 60 adding up to 100%, 40 for the month after the sale was actually made, 60 for the following month. Then we have the cash payments. So this is on the payment side of things. And we are just simply given November payments, the $16,000, December payments, $9,500. Then we have the cash balance as of November, the beginning balance. So that would be as of the end of October, which would be the beginning of November. The desired minimum cash balance, in other words, we want to have in our bank account $5,000 in the bank account. If we dip below $5,000, we would like to take out a line of credit, possibly a loan, in order to keep it at that $5,000 so that we make sure that we have the cash flow necessary to cover any obligation that needs covering. So we're going to then go back up top. We're going to take a look first at our cash receipts schedule, starting off with the sales. So we're going to pick up the sales. Sales isn't the cash receipts. That's going to be the sales item on an accrual basis, but they will be used then to think about our receipts. We're going to need to think about this back through September, because when those sales that were made on credit, meaning we're gonna assume that we collect on them up to 2 months after the sale took place. So although we're not doing a projection for September and October, we're going to be picking up those sales numbers back in those time periods so that we can use them to figure the cash flows for November and December. So we'll pick up then, this is going to be equal to September. I'm hitting tab on the keyboard so I can go over there nice and easily. Equals, scrolling over to October, tab, equals, scrolling over to November with the pointers on the keyboard, tab, equals, and we're going on over to the 17.2 for December. Then we're going to take a look at the credit sales, the sales that were made on credit. Let's pick those out, because we know that the cash sales were 30%. So that means the credit sales are 60%. Now, I want to do this with a formula. This is kind of obvious, but I just want to break this out and think about this with a formula. Now, we're focusing in on November. So if I had this November number, I could say, okay, well, I know that this number times 30% are the cash sales. So that means that this number minus this number are going to be the credit sales. Or I could take this number, that's going to be the cash, and I could say, well, what if I take 1 minus the 30%, which of course would then be, if I go to the home tab, numbers, make that a percent, that's 70%. So 70% then, 21.2 times the 70% is going to be that 14,840, because the 70% would then represent the cash sales. So or credit sales. So if 30%, in other words, were cash sales, the 70% would be credit sales. So I want to do that with a formula here, and I want to be using the numbers in our worksheet on the left-hand side to practice good Excel practice so that we can project and adjust our projection by adjusting simply the numbers in the data field on the left side. So I'm going to say this will be equal then to this number, and then I'm going to say times, and then brackets, and I'm going to say 1 minus, and then pick up the 30, close up the brackets. So in doing that, then I can use this number over here. We do need the brackets because we want to do the subtraction problem to give us that 70% before multiplying it times the sales for November. So we will then pick that up. So we can do the same thing over here in December. So I could say this is going to be equal this number times, and then brackets, 1 minus the 30%, which is going to be the 70. Close up the brackets, shift 0 and enter. We can also copy and paste, however, so I'm going to delete this just to show this in Excel, deleting this, double clicking here. If I want to copy and paste, I need to make this cell an absolute reference to do so. So I'm going to put my cursor in, well, you could make it a mixed reference, but absolute will work. I'm going to put my cursor in B7, select F4 on the keyboard, put in a $sign before the B and 7, then enter. Put my cursor back on that, autofill, putting my cursor on the fill handle, dragging on over, and this one double checking by double clicking, and it looks good. All right, so then we're going to go to the collections. The collection process then, we're going to have the cash sales. So the cash sales are simply sales that we got cash for. We're focusing in once again on November and December, so I'm not going to be looking at this for September, October. We're going to then be taking the cash sales, which will be equal to the September sale. Let's actually pull them up here. I'm sorry, the November sales, total sales, times the cash amount, which is going to be equal to the 30% cash amount. Notice you could have also have calculated this way. You could have said the 21,200 minus the 14,840, because that's the other side of it. So either way, so I'm going to do this again. This is going to be the 17,200 times the 30%. Or you could subtract these out as well. You could have said the 17,200 minus the 1240, and you'll get to the same number there. Then we have 1 month after the sales. So collections, these are credit sales that are collected 1 month after the sale took place. This is the reason we need September and October. We're looking 1 month back, that being October, when we're focusing in on the November number. So now I'm going to be picking up October. Now to pick up the credit sales, we are going to need the credit sales for September and October. So we got the total sales. I need the credit sales, meaning I need these numbers. I need to populate these numbers over here. I need to fill in the rest of this row. To do so, I'm going to use the autofill going the other way now. I can copy and paste this cell or using the autofill, meaning I'm going to go to the fill handle over here. Instead of going to the right, I'm going to be dragging on backwards to the left here, and then let go. And if I double check on that, is it doing what I would expect? It's taking the 30% of the sales number. I'm sorry, it's not taking the 30%. It's taking 1 minus 30% or 70% of the sales number. So that looks good. So there we have that. Now we can go down here and think about, well, what about the collection process? So we're thinking about the items that happen in October, the credit sales. How much did we collect on those credit sales in November? We said that we're going to collect 40% in the following month. So we then are going to be picking up, this is going to be equal then to the 9,100 times the 40%. Now I want to be able to copy this across, and to do so, I want this one to move when I copy this formula over to December, but I don't want the 40% to move. Therefore, I'm going to select F4 on the keyboard, putting a $sign before the B, before the 9. You only need a mixed reference, but an absolute reference will work, which is what we are using here. Enter, put our cursor back on that cell, put our cursor on the fill handle, and drag it to the right. Double check that this is doing what we want, double clicking on it. We're now taking the November number times that 40% that we're going to collect on it in the following month, that being December. Now we're going to say the collections that are going to happen 2 months after the sale, which is once again why we have the September numbers up top. We've got the credit sales here. We're going to collect 60% of it 2 months after, that being now November. So we're going to say this will be equal to the 7,840 times. We're going to pick up that 60%. Once again, I want to copy this over from November to December, and I don't want this cell to move when I do that. Therefore, I'm going to put my cursor in that B11 and select F4, putting a $sign before the B and 11, enter, put our cursor back on that cell, use the autofill handle to drag on over to December, double checking, double clicking to double check on December to see that it is indeed picking up October times the 60%. That looks good. That's what we wanted to happen, and that's what actually did happen. which is a good thing. So then we're going to underline these two. I'm going to select these two cells, go into the Home tab, Font Group, Underline. Then we'll use our sum function, the trusty sum function, to add up these three numbers, equals SUM, Shift 9, up arrow once, holding down Shift, up, closing it up, Shift 0. You don't need to close it up if it's just the sum function, but you can. Then let's copy and paste it this time. You could autofill this across, but I'm going to use the keyboard now. So Shift or Control C over with the arrow, Control V. There we have that. Double clicking on it just to see if it does what we would expect it to do. Summing up that cell, that column, looks good. Now we're going to go to the cash budget. Now in the cash budget, we're gonna have the beginning balance, the activity, then the ending balance for the time periods. Instead of us starting at the beginning balance in line 1 and then having the activities, inflows and outflows, and then the ending balance, we are going to start with the change, meaning inflows and outflows, then add the beginning balance to it to get to the ending balance. So that'll be a little bit different than you might, expect, but once you see that, it's pretty straightforward. The other kind of quirk that we're going to have is the fact that we want to remain or keep a minimum balance of 5,000. We will do so by, if dipping under the 5,000, taking out a line of credit or a loan from the bank so that we have a minimum of the 5,000 with a loan or without a loan. And then if we go over that 5,000, we'll simply pay off the loan to the point that it goes back down to 0. And that's kind of our safeguard to make sure that we have enough cash flows to meet the needs that could come up. And we think a minimum cash flow of 5,000 will be necessary to do that. And we'll use like a loan once again to make sure that we are in that range. So we're going to then have the total cash receipts. So the total cash receipts is where we'll start. We're just going to take the summary number. We picked these up already. These are going to be equal to what we calculated up top. The 14,704, that's the increase in cash, and the 16,556. Then we've got the cash payments, and we didn't make a full cash payment schedule here because they basically just summarized the payments for November and December. We'll take a look at a more detailed cash payment schedule, but obviously in a future presentation as we do a longer problem. But we've seen cash payment schedules, and clearly we would take the bottom line number of the cash payment schedule, which would then be, we're saying for November and December, the 16,000 and the 9,500. That's going to give us our cash flows. The inflows minus the outflows is going to give us the net flow. Inflow minus the outflows, the net flow. So we're going to subtract these out. This is going to be equal to the receipts minus the payments. Receipts minus the payments. So we had a net loss in the flow, but that's okay because we had a beginning balance before this. So it's not like we're like negative right now. And then we have the flow 16,556 minus the 9,005. So there we have that. These are just the flows. We don't have the beginning balances in place yet. So I'm going to then underline here, selecting these two cells, Home tab, Font Group, Underline. Then we're going to be adding the beginning balances. So beginning balances. Now where would we get the beginning balance? It would be the ending balance of the prior month. It's going to be the beginning balance of the current month, as we will see when we move from November to December. But we're given the beginning balance for November, which would be the ending balance of October, and that is going to be the $5,000. So that's the 5,000. So then if we have then, I'm going to create a subtotal here, basically being the cash balance before the loan consideration. So before we consider any minimum balance loan consideration, we're going to add this up. So this is going to be the sum then. It's going to be the sum of these two, which will take the 5,000 minus the net decrease in the cash flow, because that's a negative and a positive number. This will come up to a subtraction problem, equals the sum, up arrow, holding down Shift, up again, and enter. So the 5,000 minus the 1,296 is 3,704. Let's put an underline here, Home tab, Font Group, and Underline. So now we're below the 5,000 minimum balance threshold. So what are we going to do? We're going to take out some money from the bank in our line of credits, basically a loan that we're going to have to get us up to that $5,000 amount. So I want to calculate this way. I'm going to say, hey, look, I need to be at the 5,000 minus where we're at here. That's how much money we're going to take out in the line of credit. So this is going to be equal to the 5,000 minus where we are at. That means we need to increase by 1,296 to get to, summing these two up, the 5,000 balance. So that's going to give us our ending cash balance after we take out the line of credit. Then the ending cash balance then is going to be equal to the sum of the prior cash balance plus the money we're going to take out to get us to that minimum of 5,000. I'm going to underline this, go into the Home tab font group, underline, and then we're going to record the loan balance as we go through here. So here's our line of credit. I just want to track the loan balance as we go through, which is currently, we're going to say if this is the first time we took out money for the loan, we're going to say that the loan balance is that $1,296 at this point. Okay, so now for December, we have all the information on the flows, but then now we can pull in our beginning balance. All right, the beginning balance for December is going to be equal to the ending balance for November, which is that 5,000. So then we can underline that. Now we made a cash inflow in December, so now we're going to add these up, equals the sum of these two numbers, the cash flow and the beginning balance. So now we're way over the minimum of the 5,000, and therefore we can pay off the line of credit because as long as we're over the 5,000, we're good. So we're going to pay off whatever we can pay off to get to either the 5,000 or the loan balance back to zero. So we pay off as much as we can to get the loan back to zero, and then we stop, or until we get to $5,000, which is our minimum balance, and then we stop. So in this case, we could pay off the entire loan and still have enough money to be clearing the minimum balance. I'm going to say negative then of the outstanding loan balance, which is going to be the $1,296. That's what we're going to pay off. We're going to pay off the line of credit. I'm going to sum these then up, which will be a subtraction problem because one's a positive number, one's a negative, equals the sum of these two numbers, Control 0. And there we have it. I'm going to underline here, Home tab font group, underline. So now we have a balance of the $10,760 after paying off the line of credit. What's our loan balance at? It's going to be equal to the prior balance plus the activity that happened, which was a payoff this time, bringing it back down to zero. So at this point in time, then, the loan is back down to zero. After that has been paid off, we've got an ending balance of the $10,760, which of course will be the beginning balance for the next time period being January.